Welcome to the seventh video relating to property, plant, and equipment. In the first six, we concentrated on acquisition and valuation of the assets so that we do it correctly and have the acquisition cost, which becomes a historical cost, set up correctly. After we buy an asset, in the future, as we use the asset, we are most likely going to incur expenses. The question is, are these expenses something that needs to be expensed immediately if they're recurring in nature and the amount is not significant, or are they infrequent and significant amounts that need to be capitalized and we call them expenditures? So there are guidelines that tell us how we need to proceed with this. So let's start with repairs. If it's repairs and maintenance, if they're ordinary, then we just expense them as they're incurred. So to give you a quick example, when we buy a car, the cost of the car is substantial. A small new car, you probably are going to pay at least about $20,000 to $25,000. That's a large sum of money. Now you need to incur expenses to keep the car running. The one that comes to mind immediately is filling gas in the car, in the tank. That's an expense. It's needed to run the car. You just expense it as you go along. Now, how about oil and filter change? You may do that every 5,000 miles. Is that a significant amount? Compared to the cost of the car, it's not a significant amount, and it's something that is required to maintain the car running. Therefore, it has to be expensed. But if you change the engine of the car, you change the transmission, you did something big to the car, that's a whole different story. That could be an addition, improvement, or replacement. And we'll see what we would do with each of these cases. These are expenditures that need to be capitalized. So now let's move up on top over here. Anything that's an addition needs to be added to the cost of the asset. So for instance, if you have a building and you built an additional wing to the building, not uncommon at all, you see this happen. Hospitals, as they grow, they will build an additional parking lot, they'll build an additional doctor's pavilion. That's an addition. It's a significant cost. It's adding to the cost of the asset. Improvements and replacements. If the carrying value is known versus carrying value is not known. If the carrying value is known, you will remove the cost and accumulated depreciation of the old asset as you would do in terms of disposing an asset, recognize any gains or losses, and then you will capitalize the cost of improvement. Very often it's very difficult to know the cost of any one piece of the asset. So say for instance, I have a building, it's 25 years old or 30 years old, and we decide that we want to replace all the windows in the building. I know what it's going to cost me to replace the windows, as in the cost of the new windows. Do I know the cost of the windows in the building? The building, when I purchased it, I didn't pay separately for the windows. So the cost of just the windows is hard for me to identify. So if the carrying value is not known, here's what we would do. If the asset's useful life is extended, you debit accumulated depreciation for the cost of the improvement. If the quality or quantity of the asset's productivity is increased, you capitalize the cost of the improvement or replacement to the asset account. So always in the problems, look for this information. First, do you know the carrying value? That is, do you know the accumulated depreciation or not? The second is, if you don't know that, then look to see, was the life increased or was just the quality and quantity of the asset's productivity increased? You would deal with those differently in terms of which account you would debit or credit. Okay. Now, rearrangements and reinstallations. Again, it's not uncommon that it's not just DIY. It may be for more efficiency. You may have all kinds of things that happen. And we'll need to go through each one of these situations and see, do I know the original installation cost? Is the original installation cost not known? If it is known, then I treat it as a replacement. If it's not known and it's material, then I'll capitalize it. If it's not known and the cost is not material, you're just going to expense it. Okay, so remember, the guiding principle is all this accounting that we do, the cost of doing this should be less than, the benefits have to outweigh the cost of doing any of this accounting. So if I have to spend too much time trying to find the cost of the old asset or parts of the old asset, I may just not work, I may just capitalize the cost and not worry about it. So let's look at an example over here. We have transactions that have happened in 2020. Assume that depreciation is 10% per year on all machines, 5% per year on buildings, straight line method, no salvage value, that's the assumption. Depreciation is charged for a full year when the asset is acquired, regardless of when you bought it. No depreciation is charged on fixed assets disposed during the year. So the year of disposal, we don't charge depreciation. Okay, so we're doing journal entries, so I'll set up my column headings. Let's start with this. The first one is on Jan 30th, a building that cost $132 in 2003 is toned down to make room for a new building. The wrecking contractor was paid $5,100 and was permitted to keep all the materials salvaged. So I have a cost, a building that cost $132. I have paid $5,100 to get this job done. Okay, so this is on January 30th. The question is, from how much is the accumulated depreciation? Do I know that? Yes, I can figure that out. 10%, they charge us 5% on buildings. So 5% per year from 2003 all the way through 2019, because in 2020, I'm not going to charge any depreciation. So it's going to be accumulated depreciation debit, building credit, and cash credit. So which numbers do I know already? I know that building is 132. I know cash is 5,100 because that was given to me in the problem. The accumulated depreciation is the 132,000 times 5% times 17. And that's going to give me $112,200. So again, 2003 to 2019, both years inclusive, that's a total of 17 years. The asset has been depreciated. So what's left over here is the balancing figure is loss on disposal. And that works out to 24,900. So I'm going to write here in parentheses that this is the balancing figure. So once again, all I needed to do was calculate the accumulated depreciation to find out the loss on disposal over here. So in this case, I just got rid of the asset. I didn't worry about it. Now on March 10th, there's a machine that I purchased in 2013 for $16,000. I sold it for $2,900, free on board, purchaser's plant. I paid $300. The freight on the is $300 that is paid on the sale of this machine. Okay, so once again, I have on March 3rd, I need the accumulated depreciation. I have the old machine. The old machine is 16,000 as the cost. So 2013 through 2019. We are in 2020. So 2013 through 2019 is 7 years. All machines are depreciated at 10% per year. So 16,000 times 10% times 7 gives me $11,200. I sold it for $2,900, but I paid $300 in freight. So what's the net cash in this transaction? The net cash I have is $2,600. So in parentheses, I'm just going to write the word net over here so that you know how I came up with that number. That finally leaves me with the loss on disposal. This is the balancing figure, just as we had done in the previous case. Loss on disposal is a balancing figure in the journal entry, and that works out to $2,200. So in both these cases, I'm getting rid of the asset. In this case, I'm just completely getting rid of the asset. I'm demolishing the asset. I had to pay $5,100 to get the job done. I had to first calculate the accumulated depreciation to find out the book value of the asset before I could get the loss. Same thing over here. I had to calculate the accumulated depreciation. I got money, but I also paid money. So the net amount is what I put here before I could find out what my loss on disposal is. Let's look at the third transaction. A gear breaks down on a machine that cost $9,000 in 2012. The gear is replaced at a cost of $2,000. The replacement does not extend the useful life of the asset, but does make it more efficient. So I don't know the original, the amount that was I do not know the amount that was paid for that asset. What I do know is that the quality and quantity, they've told me the productivity has increased, okay? So if that is the case, I'm going to proceed with capitalize the cost of improvement to the asset account. So this is fairly straightforward. I paid $2,000, so I'll debit the machine, I'll credit cash, and that's for the $2,000. Once again, what they told me is that the gear is a part of the machine. Okay, I don't know. The machine cost me $9,000, but I don't know how much that gear cost me. So I don't know that cost individually. What I do know is that the efficiency of the asset has increased. So I add it to the cost of the asset. Okay. In the next one, May 18th, a special base is installed for a machine in 2014. When the machine was purchased, it has now been replaced at a cost of $5,500 because of defective workmanship on the original base. The cost of the machine was $14,200 in 2014. The cost of the base was $3,500. And this amount was charged to the machine account. So that's a part of the asset. The $3,500 is a part of the $14,200. But I don't know, I've not kept that separately, as in the accumulated depreciation has not been kept separately. So how would I deal with this? So in this case, the $3,500 is 10% charge on machines. So $3,500 from 2014 through 2019. Okay, I have 6 years. And that is on, where's the, that would be on this number. So we are calculating the accumulated depreciation just on the base, the base that was installed, okay? And we are taking that off our books. Now I have paid $5,500. So the new base is $5,500. So I take the old asset off the books, I bring the new asset into the books, and the balancing figure, again, the loss amount is always the balancing figure in the journal entry is going to be $1,400, the $5,500. So again, I paid $5,500 for the new base. The old one, the old assets. So you can look at this. I'm going to highlight this. You can look at this as two separate items, two separate transactions. I first get rid of the old base. The old base, $3,500 is the original cost. Accumulated depreciation is $2,100. Therefore, the loss is $1,400, getting rid of that old base. The new base, I paid $5,500, so I bring it in at $5,500. In the last one, we are told on June 23rd, one of the buildings is repainted at a cost of $6,900. This building has not been painted since it was constructed in 2016. Okay. $6,900 looks like a large amount, but relative to the cost of the building, it's not a big deal. Neither is the fact that the fact that they have painted it does not do anything to the building other than being a little more appealing or a little less unappealing perhaps. Okay, so this is something that companies do routinely. So this is just a regular expense. Okay, so this would just be, you would debit repairs and maintenance expense and credit cash for the 6,900. It doesn't affect the asset in any way, shape, or form. So the building account, 6,900 doesn't do anything to it. Okay, so it's just a regular repairs and maintenance expense. So once again, look for the information given. See if you can calculate the accumulated depreciation. If you can, then you're going to update that and take it off your books. In this particular case, we said the year that the asset is being disposed of, we don't charge any depreciation. So I just needed until December 31st, 2019. Those calculations had to be done. But always pay attention to dates because that could change your answers quite significantly. So what you saw was, in all of these cases, the loss is a balancing figure in the journal entry. Okay, so in 1, 2, and 4, we had to calculate the loss, and in each of those cases, they were the balancing figure. Once again, any property, plant, and equipment that you purchase, you are going to have subsequent expenditures. We need to see whether we need to capitalize it, how we capitalize it makes a little bit of a difference in terms of which account is going to be debited for the cost of the expenditure. So with that, we are done with the acquisition and subsequent expenditures of the property, plant, and equipment. The last topic left in this video series is disposal of an asset, complete disposal of an asset. We'll look at different situations and how you would deal with the disposal of the assets in each of those cases.